Hello, everyone. Welcome to another collaboration episode between the Baiguan and East A newsletters. My name is Robert Wu. I'm the CEO of Baiguan Lab, China's leading alternative data company, and also the founder of Baiguan Newsletter and Baiguan Radio. With me is my co-host, Johnny Zhou, who is a venture capital investor in Hong Kong and is also the founder of the East A newsletter. So every week, we try to provide our comments about current events about China, the events that have major impact. And we hope to have this kind of talk with each other like a friend for 20 or 30 minutes every week. So, Johnny, I think the highlight of our last week was the trade talk between US and China in Geneva, Switzerland. I think when we were recording that episode, the meeting was still going on in Switzerland. And during the last episode, I think both of us were a bit optimistic about the outcome of the meeting. But I think none of us have predicted the level of optimism, right? In the outcome, I think, exceeded expectations, even in our most best case scenario. I mean, personally, for me, it's that just before Monday, which when the news was announced, I think I had a dinner with some friends, and during the dinner, people were asking me what I think about. I said, I think the tariff will be lowered, maybe around 60% level, which was the level that was originally suggested by Trump during the election. But I said maybe it would take 2 months or something. Surprisingly, it just took a day, all right, to roll back most of the tariff. And right now we still have the 20% fentanyl tariff that was before the Liberation Day. And then on top of that, we have 10% that was like the same for the rest of the world. And for the rest, 24% is got delayed for 90 days, just like the rest of the world. So it's as if the US-China thing hasn't really happened, and China was just like treated as in the same way as the rest of the world, right? It was really surprising. Johnny, does it surprise you?
Obviously, it's a positive surprise on the rate cut, you would call it, right? Because we would have thought the two sides will meet in the middle, trying to walk back on the tariff rates to make it both economic but still meaningful for the Liberation Day tariff to take into effect. But it seems like the US side is giving in more, at least from my perspective, because it seems like there's very little incremental tariff on top of pre-Liberation Day level. That being said, obviously it is only 19 days, right? And considering China's counterparty is unstable, which he will just record a tweet and just end up the whole thing. So I guess it's a bit of a truce for both sides, but it's simply not something that you would celebrate that easily. I think what is interesting is the behavior after the truce of both sides. It seems like the US-China trade has basically exploded in the recent weeks. I've heard that the ocean carriers between the two countries is costing more than 2 times than what it was like previously. And I guess from an exporter or from a trader's perspective, you need to take advantage of this time window to get as much of the volume you could before the Trump administration actually reacted otherwise. So I think it's interesting. Obviously, it's a positive news for the market, for the world, but it's still too early to celebrate.
Yeah, do you have any prediction after the 90 days? Do you think the 24% will be in effect, or it would just be another kind of TikTok situation where the deadline just get extended and extended to the point that it's not going to be any meaningful? Do you have any take on that?
So there's an interesting sort of take on this, is that someone dig out what happened in 2018, and it's actually precisely May of 2018 is the time when the first round of trade war come to a truce. And at that time, both sides decided to get into negotiation. And then I think it's probably in July 2018 that basically they split on not a very good terms. I think Trump said there was lack of progress, and then the overall tariff has gone up again. So that's back in the days in 2018. If history is a guide, then this year, I feel like it's going to be quite similar. It's like towards the end of this 90-day, there will be something happening. And we hope that there's some progress, but it's also very possible that just Trump wants to escalate this issue and get back to a higher tariff, and then China responded with toughness, and then this thing just gets all over again. I think despite the current goodwill from both sides, in terms from an economic point of view, but I do think the politics may kick in maybe 2 to 3 months down the road. So I'm not so optimistic that both sides will find a solution in 90 days. That being said, it's possible that they would just kick the can down the road and said, okay, 90 days is not enough, so let's just give another 90 days. That's possible. But given the Trump administration's trait in the past, I think it's very likely it's just going to explode and just say, okay, it doesn't work. And so why don't we just hike the tariff again just to start the escalation war again and then try to find a solution afterwards?
Yeah, I think I have a slightly different take. So I think the inflation situation will be key to watch, and that will act as some kind of restraint further tariff hikes. And you just described right now there was a big scramble to make orders and to basically stock up, right, and to pay for the inventories, fearing that there might be a hike in the future, right, after the 90 days by a lot of the importers in the US from the Chinese exporters. And I think by that scramble, you mentioned the shipping cost has soared, and I imagine many other costs will also jump. So ironically, it could be quite inflationary even with the lower tariff, right? Before, the tariff situation effectively became a embargo situation where you might destroy all the demand and you might not be able to see that much inflation. But right now, it's hard to tell because there's still high tariffs, but then there's also the urgency to purchase stuff. And I think, and I cannot predict what inflation will look like, but if it does go up, I think it will have considerable restraint on the Trump decisions to further increase the tariff. That's my guess.
I think you're thinking very rationally, but unfortunately, I don't think the other side of the table is thinking so rationally.
Okay.
If he really cares about inflation, then this sort of tariff war with China is suicidal. But it seems like he truly believes that by putting pressure on the Chinese side, China will collapse. So I think this is his true belief. And as a result of that, I think he doesn't have a clue about what this behavior will really cost the US economy. And I think you're right in the sense that even with this 1 month sort of a gap, the inflation level will become a little bit out of control. And we'll just witness that. But I just don't see the other side to be so rational and feel like, oh, the inflation will go up, so likely there's not going to be a rate cut from the Federal Reserve, and then so we should play ball with China. I think at a certain stage, because of lack of progress or whatever, he's just going to explode again. That's my pessimistic guess, but I hope that the world will run on your course where things are more optimistic.
Oh, I hope so too. So yeah, I think there's another turn of events at least on the US side, besides this trade talk walk back, and that's concerning AI and chips. I think last week, Trump administration just completely turned around the AI diffusion rule in the last days of the Biden administration. I think In the Biden administration rule, the world was separated into three tiers of countries. Tier one are basically allies or the people who can have access to the advanced chips and models. Tier three include China, are the strictly forbidden one. But then you have all these tier twos, which have very limited access to American technology and products related to AI. Basically, Trump just completely destroyed that. I will say also a ill-prepared mechanism to control. And instead, he was visiting Middle East, received by many of these Middle Eastern countries, promising to sell a lot of stuff, including the chips, including defense products. So it seems there was like a rethinking, like complete turnaround in terms of competition with China in terms of technology there. The Biden administration, their thought was to restrict the supply of advanced products from reaching the hands of China. But then I think the Trump's idea was to flood the market with American products. And also they issue these kind of guidance letters that are, I don't think they're legally binding stuff, but they are suggestive of the intention of this Trump administration in that they warn other countries or companies using Chinese AI chips, right, including Huawei, Ascend, and maybe other chips. So I think the idea has been turned from supply control to demand restriction or cut. So instead of limiting the supply of American chips, they are discouraging the clients from purchasing Chinese products and also encouraging them to buy US products. It's a complete turnaround in terms of logic. And I'm still trying to process how it may work in real life, in real terms. Do you have any ideas about that? Because I know you're investing a lot in the AI related fields. What's your assessment?
I think this is obviously a very good news for NVIDIA and related AI chips companies. And you can see from the stock market, actually NVIDIA has rebounded more than 40% from its lows since the Liberation Day tariff thing. And obviously it also benefits someone like AMD or Intel, right? I think that it's a big win for countries who are previously subject to a limit, such as the recent visit to the Middle East and then Saudi Arabia, UAE, even Singapore and Israel, right? They could basically buy more US advanced AI chips. So the guidance towards China is just like a things as usual, right? Because if you think about from a substance perspective, basically there will be more sales into the Middle East and Southeast Asia, right? And the real thing is that actually China could always buy from second-hand sources from Southeast Asia and the Middle East, right? So effectively, this diffusion rule is ended. And the previous Biden administration basically is very strict on this, and they believe that there's a lot of countries that are able to doing the re-export, or you call it repurposing, into Chinese-related models and all that. But with this rule being repealed, I feel like it's basically the advanced AI companies able to sell more chips, and that's it. You think about the long-term effect, it's always long-term. And the Trump administration could always say, oh, I've issued a warning, so it's just there are some bad actors out there, right? And they could always say that. But effectively is helping somebody like Jensen Huang. And I believe it's all business. It's you're thinking about, okay, if NVIDIA can be supported, then the stock market will go up. So that looks good on my front. And I could have more room trying to do my stuff, right? Or do my sort of art of the deal. And that's basically the whole story. I don't think they care that much about, okay, national security and all that. And to be honest, I even think that probably the US has come to a reckoning that, okay, even with the advanced chip, their AI systems may not be that ahead of China. even with the chips and with the huge deployment. So that's basically a very business-oriented deal. It has nothing to do with a real sort of national competition, national security. Obviously, they want to make a stance on it, saying that, okay, I actually care a lot. But I do feel that they don't care that much.
Yeah, that's quite a take. I'm not entirely sure, but the thing is, it's also from a kind of competition perspective, maybe it's even more effective, a competition angle to not to restrict, right? To allow more people buy from the US. And maybe that's actually better for competition in terms of the US, from the US perspective, right? Because when they restrict themselves, it was just basically force China to and Chinese companies to develop their own chips and AI technologies. And then you have all the tier two countries, between US and China to benefit the China's products. Trump could argue that his policy may be even better than the previous one, which will, I personally think, will doom US advanced technology a lot more than the policy right now. Do you have any? I mean, it seems like there's some kind of disagreement between us here because you think it's not politics related, it's just pure business.
There's the politics here is to restrict China, right? And you can see from the guidance, right? There's this guidance on Huawei chips. There's this guidance on using US AI chips to train Chinese AI models, right? And third is obviously to protect the diversion tactics, right? But the reality is China will train its own AI chips no matter what, right? Because it's already subject to heavy export control. And obviously, there will be companies doing this sort of re-exporting sort of effort, trying to import some of the chips into China, but it's not going to be on a huge scale. And in terms of the real productivity here, what we're talking about is that for the US companies or whatever the Stargate project they're working on, is that they have massive computing power based on the latest NVIDIA chips. And as a result of that, they will have significant advantage in terms of the large language model productivity. But in reality is that if you look at for DeepSeek, right, and also the latest sort of models that are involved in the US internal competition, it doesn't point towards the real advantage if there is a significant sort of a chip advantage. So let's say you have a lot of high performing chips running at a significant advantage over China, but that doesn't necessarily translate into better productivity in terms of the model. And even if there's better productivity in terms of the model, is there a cost effectiveness for that? I think a lot of people have been arguing that, oh, even for the ChatGPT 4, it's already enough for a lot of real world uses. But if you think about for now, if there is a single sort of case that really has already transformed the entire industry, I don't think there is one, to be honest. The inconvenient truth is that no matter what US wants to promote its chips, high performing whatsoever, and saying that the large language model is going to have a huge advantage over China, I just feel like to be a fairy tale. And China is going to train its own chips no matter what. And this chips is going to be used on internal Chinese models. And I just don't see there's going to be a large productivity gap from that of the US, unless the US just showed a completely new model that, there's no way for China to follow. And then it may change the story. But I just feel like this sort of a huge productivity gain is a myth rather than a reality.
Yeah, makes sense. So it's irrelevant which way the US goes in terms of this kind of policy. Cool. Yeah, so I think there's another item that we need to discuss a bit. So the US was reaching out to Middle East last week, while China was actually reaching out to Latin America. There was this big forum between China and some Latin American countries in Beijing. Many state leaders, including Brazilian President Lula, has come to Beijing, and there was meetings between them and Xi. It was quite interesting because you don't get to see a lot of these Latin American countries coming to China at the same time. And then there was a bunch of interesting agreements between China and these countries, especially with Brazil. Many Chinese companies are actually expanding their footprint in Brazil. I think one notable case was Meituan, the Chinese food delivery and instant shopping platform. I think Meituan is committed to investing a lot of money into Brazilian market by launching the Kita service. And I think there was also a photo of Meituan's founder Wang Xing standing together with President Lula this time as well. So it does seem, and I checked some data. I actually didn't realize before, but in all the BRICS country, Brazil's GDP was actually the third, just behind India. So it was also a very, very important agricultural and raw materials exporter for China that could always act as a kind of backup for Chinese imports during, for example, if the tariff situation between US and China worsen. So it's a very important relationship between China and another major global South country. So is there anything that any interesting observations you might have about this forum?
Yeah, I think obviously the most notable one is the visa-free policy extending to 5 countries in Latin America. And that's also unilateral, which is quite interesting. And given the lengths of travel between the two, you can call continents, right? So the visa-free length is 30 days, which is quite impressive. I do think initially China has a lot of commercial interests in Latin America, and the most notable one being the soybeans or the imports from Brazil, and also copper imports from Chile. China is also opening a new port in Peru. Yeah, China is doing a lot actually in the region. The interesting fact is that in the normal, traditional sort of a diplomacy point of view, from the US, it's called the Monroe Doctrine, right? So basically, the American continent is supposedly not to be touched by any other sort of foreign powers. But it certainly is not the case, given the strengthening of the trade relations, or at least from economic relations between China and Latin America. And I do see that the US has little to offer, given the current global tariff war they want to wage against most of the continents, right? And so China is actually offering more towards the Latin American economies. So I do see there's a bit of an angle here. But yeah, I think the US will try its best trying to court or cut short the relations and trying to extend the Monroe Doctrine as much as they could. But that simply is not going to deter China from doing further investments, trade, and even further works with the Latin American countries. And actually, some of the countries involved in this forum doesn't even have a diplomatic relation with China.
Oh, really?
I think they still, yes, I think it's Saint Lucia.
Oh,
Is another country. They actually still has an official relationship with the ROC in Taiwan. So yeah, that's a very interesting fact, is that despite all of the potential challenges, actually the two economic regions working very closely with each other.
that's great. I think you mentioned a good point. Trump doesn't really have that much to offer, and nor does he want to offer, I think, to many of these countries. I think he's making his new best friends in the Middle East with all the kingdoms and the emirates. And there are not many parts of the world that I think he personally really respects. Yeah, so it's a very interesting reconfiguration of the world's economic and even political systems. Yeah, I think maybe that's it for this week. You have anything more to add?
This is a very minute one. And for those that are interested in investing onshore Chinese market, there's this a revamp of the M&A regulation in the A-share market, which basically reduced significantly some of the what we call the lockup period for the private equity investors as well as the controlling shareholders involved in these transactions.
What do you
And
mean? Like merger and acquisitions, like listing companies, buying other like private companies, this type of situation?
yeah, so basically what you normally do for a listed company is that you offer shares towards the public shareholders, right? And then it's actually counted as a dilution for all of the shareholders involved. And so previously, there's actually a very harsh sort of lockup period for no matter what party is involved. For example, some of the listco, when they offer shares towards private equity investors, even subject to a pretty long lockup period, like 12 months. And that is a challenge, actually, for some of the private equity firms to conduct such transactions.
Right.
Because in fact, a lot of the times, the immediate sort of capital market impact is relatively near term. And on top of which is that the controlling shareholder will be subject to even longer lockup period, like 24 months, if you're doing transactions like that. And so if you offer shares and then do a transaction like this, it's actually not very, I would say, there's not a lot of incentive for any parties involved to do because they are subject to heavy lockups. And if there are heavy lockups, then there will be less M&A transactions for companies involved. And so right now, the problem with the Chinese onshore capital markets is that there's a lot of assets out there that are, you can call it distressed. They have a lot of existing shareholders that wanted to get out, but they couldn't find a way out. And yeah, actually, since September of last year, it has been meaningful moves trying to promote M&A transactions, which has been helpful for some of the transaction activities. But again, because of the heavy lockups, this is a major challenge for further transaction volume to expand in the future. So I guess this is relevant if you are very interested in onshore Chinese A-share markets and for players like us who are deeply involved in capital markets here that do onshore transactions from time to time. And if the lockup period is now reduced significantly, and there's a regulation that's saying there will be easier approval process. Now, this is always a little bit opaque from a Chinese point of view, but at least they pointed out that there will be easier sort of timeline for these type of transactions to be approved. In the past, you don't know. You don't even know how long it will take, right? Now, at least from the CSRC level, the timeline is relatively short. So I think there's a bit of a real breakthrough here. So I think in the next 12 to 24 months, you will see a lot more M&A activities in onshore Asia markets.
Yeah, I think that has been a trend, right? Since late last year, where when they just keep introducing all these different policies to basically designed to encourage more M&As by listing companies. And there are different areas and different components of that are just being fixed every now and then. So including this one. So I think this is just something that the regulators, they really want to see coming and happening more. So if you're interested in the private equity market in China, you will get to see more wider and opener channels for your investment exits. So I think that's good. Good news for you guys, at least.
That's complicated because in China, it's always like the rule is the rule. But in reality, it will really pan out is a separate story. So we really need industry practitioners to go through the whole process and to examine whether such measures taking place are for real, right?
Yeah, so let's wait for good news from you guys, right? Next time when you done one of those M&As, come and tell us how difficult it has been or how easy it has been. That would be a very important information.
Yes.
Okay, cool. So let's call it a week. Great.
Yeah.
So
and let's talk next week.
sure. See you next week.
Bye bye.